From the 28th to the 1st of every month, it may look that it's only a matter of 3 to 4 days, but for Manisha, it feels like the longest of days. In reality, as the month comes to an end, Manisha's bank account runs out of balance. The problem is that on the 28th of each month, the SIP gets auto-debited. Manisha has to borrow several times, and twice, the bank imposed a penalty of 500 rupees due to low balance. Moreover, missing payments is also a cause of worry about the impact on her credit score. Then, a friend suggested that she could transfer money from her credit card to the bank account. Since Manisha was not aware of this, she was surprised and asked if it was possible. Yes, it is possible. You can transfer money from your credit card to your bank account, but it has both advantages and disadvantages. Let's understand all of that in detail in this video. First, how can you transfer money from a credit card to a bank account? Well, you can do a direct transfer. Many banks allow you to directly transfer money from your credit card to your bank account through their banking app or website. Please note that different banks may impose different daily transfer limits, so make sure to check with your bank for these details. You can also transfer money using net banking. Now, if your bank doesn't offer net banking services, log into your account, go to the credit card section, choose the transfer option, enter the amount you want to transfer to your bank account, follow the instructions and complete the transaction. Another way to transfer money is through a phone call. Some credit card companies offer fund transfer through a phone call. You need to provide necessary details to the credit card company and then you can request for fund transfer. After confirming the amount, you can proceed with the transfer process. Now for the last method, you can fill out a check. Typically, credit card companies don't provide checkbooks. You will need to request one. This method is known as check to self. Write self as the payee on the check. Include other required information, deposit it in your bank branch, and once cleared, the money will be transferred to your account. While using a credit card to transfer funds can fulfill your needs in emergencies, it has some drawbacks that you should be aware of. What are those? Well, the primary purpose of a credit card is direct payments, and frequent fund transfers may hinder its intended use of shopping and earning of reward points. Transfer of funds from credit card entails a processing fee, typically 1 to 5% of the value. Apart from this, the interest begins to accrue immediately on the funds withdrawn. And one more thing, if the usage of the credit card exceeds the limit, the income tax department can scrutinize your transactions. Information about annual spending exceeding 2 lakh rupees with a bank credit card is disclosed to the IT department. Frequent transfer of money may attract the attention of tax authorities. Transferring funds in this way to your bank account will eat up a significant portion of the credit limit. It will be shown as cash withdrawals. As credit card bill rises, the interest on dues would also rise. Any payment default can harm your credit score and impact your credit history. It will make it challenging for you to get loans in the future. Therefore, it's okay to transfer funds in emergencies, but making it a habit is not advisable. Excessive transfers like this can put you in trouble, so using a credit card prudently is essential.